Hello guys, this is Anshuman Rao and welcome back to another video. So this video is gonna be about one of the most important topics about ego in trading. This video is for my journaling purposes. Means I also video journal. Like, I don't like to journal my trades in pen and paper because that's quite not sustainable for me. And if I would have to recall my trades and recall the things, recall the mistakes that I have been making through my entire trading journey. So the journals, I make sure that the journals are easily accessible. So yeah, so this video is for my video journaling purposes. And also I make this video for my audience to you know because I know that the retail traders make pretty much the same mistakes. So yeah, this video is also not special from another any other video. This is also gonna be the same video journaling video. Yeah. So but the thing is, today's topic is quite interesting. So this journal I'm doing because I have learned a lot today. Like, to be honest, in my personal life I'm little egoistic, but when it comes to trading, the market doesn't care about your nature. The market even doesn't care about your position. The market doesn't care about your position, how much money you got, in which account you are trading, or how much big of a person you are, how much egoistic you are, how much calm you are. It doesn't matter. It doesn't bother the market. The market will move its own way. But the thing is, I will be explaining you the things. The video is also a sense of a trade breakdown video. So let's jump into the trade breakdown first. So the day pretty much started well. We were just took a L in gold, I guess. Yeah, as you can see here. So this is my MetaTrader chart. So as you can see in the trading history in XAUUSD, we took a trade, I guess, here based on our trading setup. So here there was a major resistance, as you can see here, also here and here. So we were aiming to cover up this clean range over here. So we basically took a sell direction trade over here, but the market moved against us. So the pre-market game plan for today was, let me first jump into the pre-market game plan. So what we had was on in 7 p.m., like 7 p.m. IST. So this time, this time is basically of Indian Standard Time Zone. So 7 p.m. basically in Indian Standard Time Zone means 30 minutes after New York session, NYS New York session open. So we had a major news event. That's PPI, and not much of a difference over here. Just we got a most volatile candle, so bearish candle. So that actually didn't make any difference. So this major news didn't make any difference. Just I to make sure that there is some economic event or major news coming. So today at 7 p.m. there was PPI and PPIMM, just like something you know so yeah, this was the major news event. But the thing is, we placed a trade in gold that was around here. So what happened was, we broke we just broke below this support over here, and we also, the candle, as you can see, this candle also gave a closing below this zone over here. So it was this candle was of 3 p.m., and in 3 p.m. IST, London session is going on. So as we know, London session has much of volume, so there are higher probabilities for the price to move bearish when it breaks a support, and also gives a candle closing below the support. So pretty much the same setup, and we aimed for Let me mark the trade for you so that I can easily explain it to you. So we aimed for, I guess, yeah, a 1.5, yeah, 1.4, 1.5 hour trade. So I know the risk to reward ratio is not enough. I usually don't take this kind of trades, but pretty much took a L. Just yeah, it was a good loss actually. So before, the thing was, my pre-market game plan was two things. So I made sure that, is there any major news? Yeah, there was major news, so I will be avoiding trading during the major news. So I didn't have the intention to trade during major news, so I would have to close the positions before the major news, or I will be trading after the major news impact. So this was one of my pre-market game plan for today. And the second pre-market game plan was, I will be taking larger positions today, due to which I faced a larger loss. But the thing is, I would have closed the day in positive. There was chance, but I didn't do it just because of ego, and I will be explaining it to you in the further, in this video, in the further time. And let me just, you just have to watch this video till end, so that so that you get to know what happened next. So this was a trade, this was a pretty good trade. I don't blame this trade, but the thing, there was the main drawdown, the main drawback of this trade was, the trade actually was okay, the trade was in the setup, but the risk to reward ratio is not enough. So it is actually below 1.5%. So this is one of my mistakes. So as I am video journaling, so I am opening, very much open about my mistakes, so that I get to know when, you have to understand the things. So as you can see, risk to reward ratio is 1.32, which is, it's not enough. It's very much less than 1.5% also. So 1.5% is the minimum risk to reward ratio. Even whatever strategy you are using, what ICT, SMC, supply demand concepts, or simple price action, technical analysis, whatever you are using, there make sure that the risk to reward ratio minimum should be 1.5 R. So if the risk to reward ratio is not 1.5 R, if you are not getting the risk to reward minimum 1.5 R, it's better not to take that trade. It doesn't matter if the setup is formed in your session, or it's a very very good setup, but you are not, the thing is, the main thing, that's risk to reward ratio, you are not getting it enough. Just imagine if the trade goes against you, okay, no problem. But if the trade goes in favor, you will be not winning enough. If you do the same thing over and over again, no matter how good your winning rate would be, like, there are very few traders, who have more than 50% win rate. But there are also traders who have less than 40% win rate, and they are still profitable. And there are also traders who have more than 50, 60, 70% win rate, but they are not profitable, just because risk and reward ratio. Because sometimes this is okay, this is 1.5, this trade is little less than 1.5 R risk to reward ratio. But the thing is, some traders who have 70-80% win rate, but they are still not profitable, the only reason behind their unprofitability is the risk more than the reward. Means they risk $10 to make $6, or they risk $10 to make $4. So in the long run, even if your winning rate is, let's say, 80% or 70%, still then you are going to be unprofitable, because the 20% of the times, or the 30% of the times that you are going to lose, those losing amounts are going to be much more higher than your winning amounts, because you are risking more but your reward is less. So this is basically the value which I'm giving to you. So my mistake in this trade was, this trade wasn't making any sense, but still then I took this trade, because Why the trade was not making any sense? Because the risk to reward ratio is not in my playbook. So the main thing is here. The main thing is here. This trade in GBPJPY, which okay. The thing about me today was I lost, the amount which I was willing. I didn't, I didn't lose anything extra. As you can see here, if we go to our prop firm account, you know $1121, but my account size is, it was 51,000. My account size was $51,032. So if you will consider in percentage wise, so it is less than 2%, close to 2%, it's close to 2%. So in two trades I'm losing 2%, means okay, it's not problem. Like, I'm not over risking, I'm risking the amount which I'm willing to lose, and that's perfect in long run. But the thing about this trade is, as you can see the entry over here, I pretty much, on 18th, 18 means during pre-New York. So New York starts at 18:30 according to Indian Standard Time Zone. So at 18 I executed my order. As you can see here, I took my entry over here, and also I took a trade with $2. I entered the trade with 2 lots, and as you can see here, my loss is minus $775. So this is the biggest loss in a single trade till now in this account, which is $770. So once upon a time I lost about $763, let's say, in 1 2 3 4, after considering after taking many trades on that losing day. Basically that wasn't my day, but still then total I lost about $763. But today in one trade I lost $775. So this is the largest amount I lost in one trade in this account especially. So yeah, the thing was, okay, I took an entry over here. We had New York session open, New York Open coming in about in 30 minutes, and when New York session opens, it overlaps with the London session, and we get due to the more volume kicking in the market, we get high probability trades if support or a resistance is broken or and closes. If a candle is breaking the support level and closes below the support level, then more likely during those New York and London session overlap, there are high probabilities for the price to continue pushing down and down if it breaks and close below support, and vice versa with resistance. So what happened here was, okay, when I took the entry, I was in positive in the next 30 minutes. For next 30 minutes also I was in positive. For the next 15 minutes, for next 10 to 15 minutes also I was in positive, and my plus amount was, so basically my SL was simple. I set the stop loss based on the 30-minute time frame above here, because as you can see there is a, what you will say, we can consider this as support, and we can consider this as resistance. We can consider this as you can see, there is a small consolidating area over here. So this is a small consolidating area over here. So what I did was to set the SL just above this small consolidating area. So yeah, so what I was saying, so I was in positive, and pretty much $500 in positive. So in the this trade is after taking the L in gold. So my loss in gold was around $328, and now in this candle over here, as you can see, this candle closed as a bull candle, as a bull, doji, or what you can say. This cannot be considered as doji, I guess so, because I don't know much about candles patterns. I just simply focus on price action. So I was in $500 positive, and as you can see here, there is a support again. So the market, there are high probabilities for the price to reverse back from this zone, and also it did. As you can see, the wick here, market just, after this candle has closed, again after this opening, market pushed down again, and just after entering into this zone, it reversed back and went up. So what I did was, if I would have even booked partials over here, I would have lost less. Okay, we are going to lose, I'm accepting that, no problem. The setup doesn't work every day, the setup doesn't work very often. Okay, we can only make sure that we lose less. But what my ego was, so basically I set my TP over here based on the 1 hour time frame. As you can see, the 1 hour time frame, as you can see, after this support has broken, there is a clean range over here. So my plan was basically to cover this whole range over here, this whole sexy clean range over here. So my plan combined with ego, and I was, before I took the trade, and when I was in positive, I became overconfident, and my ego also aligned with it, so it made even worse. So behind every, losing trade, there is a mistake, and you have to figure it out. You have to figure it out, otherwise you will be, repeating the same mistakes again and again. And if you don't figure it out, the mistakes you make again and again, and you will be losing again and again, and it will be affecting your psychology, and you will be blaming the market in return. Actually, the problem lies on you. So this is what this is what trading teaches you. So I was planning to cover up this whole range over here, which is, not possible. You have to have patience, but the thing is, you have to book partials, the main thing, which I didn't do. Or else, in the 30-minute time frame, if I would have, closed full amount on at this point over here, I would have ended up, in plus $200, plus $200, plus 250, plus $280, I would have ended up if I would have, closed, because I entered here with 2 lots, and if I would have closed here, it was showing me around $553 something. So if we subtracted with the gold's loss, which I took L, around $328 something, I guess. So I would have been ending the day with plus 200 something dollars, which is good actually. It is pretty much good than minus $1,100, obviously. So yeah, this was the mistake. There was a support over here, I would have been booking partials here, and if also this any candle, if even after the price breaks and closes below this zone, the next support was here. So there was, again, the probabilities were higher of the price from reversing back from this zone over here. And again, any support was here, another support was here, same thing goes and on. Even I would have booked partials here and trailed my SL all the way to, break even, I would have made something, So yeah, again, a mistake was a mistake. Learned a lot from this loss, especially learned a lot from this losing trade. But yeah, win rate is pretty much good, as you can see, but we are in negative now. But yeah, everything happens for a reason. We have to let go. So yeah, this was all for today, guys. I hope you got something to learn. I hope you have learned how ego destroys your account. Ego will be always destroying your account. If you have ego in your personal life, if in your personal life you are very much egoistic, then okay, no problem, but don't put your ego in the charts, because the market doesn't care about you and your ego. If you are, you are welcome if you want to, come into the market with ego, but you will always end up losing. You will always end up fucking up your account due to, that ego mindset, that I'm not fucking selling. If I'm in positive, okay, let it be, let the winners run. Okay, you have to let your winners run, that's okay, no problem. But if it reaches a certain zone, there are higher probabilities that market will be reversing from that direction, from that zone actually, sorry for pardon me. So if a market reaches a level, whether it's support or resistance, whatever, according to previous price action, there are higher probabilities for the market, there are high probabilities for the price to reverse back from that direction. So you have to book partials when the market reaches that level. And if it breaks and closes below that level, then okay, there are high probabilities for the market to continue flowing in that same direction in which you had taken the trade. But again, this was all for it. I hope you have enjoyed a lot and learnt a lot from this video. So yeah, Anshuman Rao signing off. Bye bye. Peace out.